Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for June 28th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. Our hypotheses are our trade plans. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we have plans in place that will instigate once we determine who's taking control, the buyers or sellers. So we wait for the market to open up, then see who takes control, and then execute the plan that best suits the market. Good example of that was yesterday. We basically went through a couple different plans. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here on the go-to, and then we do live trading analysis during the regular trading session with our members. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, our main hypothesis was a open auction in range, a push up to take out the overnight high, and then find sellers, and then rotate us down towards the month open at 27.11 and a quarter to test that month open, and back to the scene of the crime, which was the Trump news that came out that took us up in the pre-market session. And basically, that's what we got. We did get a little bit of extension, though. Our Hypo 3 was an open auction, leaving the gap open, and then moving up into test the key line in the sand at 45, and then push through up into the 53. So we were on Hypo 3 for the most part until we broke back inside of the prior day, and then failed to hold once we tried to get back above it. And then, the short was into the return of the scene of the crime, which was down here at the 12, and a test of the month open. We had a 44 and 3/4 point range yesterday, very large range. We came down and we closed below the month open, and that's important because that's going to embolden the sellers, the bears, with the 2 days left, today and tomorrow, they're going to try to keep it down below 27.11 and a quarter, so we can end up with a bearish month. It is the end of the week, the end of the month, and the end of the quarter. So, we could see critical mass kick in on the weekly basis. I doubt we're going to see it on the monthly basis, but we'll talk about that when we get there. Take a look at the news. The news, we had continuing jobless claims, GDP, and initial jobless claims. Basically, it was not a big miss, but the GDP came in lower than expected. We were expecting 2.2 and came in at 2.0. So we are seeing some continued weakness down below, but the market didn't react too much. The reaction actually was prior to the 830 when we broke through that 2700 and did the stop run down into the 93. I think it was 93 and a quarter. We've got 10:30, we've got natural gas. We've got Bullard speaking from the Fed at 10:45. We've got KC Fed composite and manufacturing index at 11. Then we've got Bostic from the Fed speaking at 12. 7-year note auction. But really what's driving this market is end of month and the tariff and the tweets that we're seeing and the news coming out in terms of the tariff wars that are heating up. Remember that July the 6th is when most of these tariffs are going to go into effect. So we are going to see some uncertainty into that date, and you're probably going to see some volatility. So each day I start my day with a very simple exercise. I don't veer from it. A lot of people think it's a too basic, but to me, it's important to understand where we are in the different time frames in terms of the trend. And I use a simple candlestick chart with a 9 EMA, 20 SMA. What I'm looking for is, the strength of the trend. Where are we in the trend in terms of that periodicity? And you can see that we've got good slope and good separation. We had 14 months of one-time framing up. February, they violate the one-time framing, and then we've been pounding on the 9 EMA, but they bounced off of it in May, and they were bouncing off of it and getting the continuation in June, but now we're coming and we're below the open of June, and we're coming down. The trend will get challenged down in the mid 2600s, but the trend itself is still intact on the monthly. On the weekly, you can see that we have broken below the 9 and the 20, so we could get a intermediate downward trend towards that 2669 area, and I'll show you why when we get into the structure and the composite. Going to the daily, you can see that we are trending down towards the 9 EMA. We talked about this yesterday coming into the session. We had a FUBAR Mr. Sneaky technical gap. I said we were likely to come up and test that 9 EMA, close the technical gap, and then based on that, whether we rejected it and go back down towards the month open and towards the 2712 scene of the crime on Trump's news yesterday morning. That's exactly what happened. Now we're getting the continuation, and we're getting a possible change of the trend on the daily. Going to the 4-hour, you can see that that is accelerating. We're getting good slope, good separation. We rejected the 20 in yesterday's session and back below, created a small FUBAR Mr. Sneaky technical gap, came back, rejected the 9, and now we're getting the continuation. And just looking at one level down, looking at the 30-minute, we consolidate and then they break, and now we're getting a possible continuation on the trend. So taking a look at the composite, and just to give some narratives for those that are not in the room, this is an RTH, regular trading session, daily candle. And these are my composites and my micro composites. We had this long upward trend. We go in, we put in a new all-time high. This all-time high is an unequalized all-time high. The actual all-time high was put in the Globex at 28.87 and a quarter, adjusted to the June contract, but the RTH is at 28.84. I still expect at some point in time that we're going to come back up here. And this move down is nothing more than a move back into this value area. We've got a value area that runs from the gap down day. So they tried to hold value in the 28s. They gap down, and we make a full run down through to the prior balance area that started this whole move up. And then we find the buyers down there. They run back up. They try to get back into the 2800s, back to an area of price acceptance. They fail at that area. We fall back in. We come down. We test back down again, put in a higher low, and then we start working our way up. And we've been chopping inside of this large value area that goes up to the 2795 area down to the 2659. We get the VPOC shift, this VPOC right here, which is the most traded price in this micro composite, going from the February 2nd gap down day, shifted from this down here in the 69. It was 69 in the March contract. It's 72 in the June contract. This shifts up. The smaller time frame, okay, microcomposite also shifts up. So we accept that value. We break up, and the microcomposite value area was at the 45.50. We break out of value, accept value, go up, and then they fail at the 96, fail to get back into the 2800s, put in a lower high, and then we come down and we tried to hold value above the 45.50, which was our key line in the sand, and we broke down and we come back down and we spend 2 days trying to hold at the microcomposite VPOC at the 2722, and then we try to rally yesterday and they fail at the value area low of the breakout microcomposite, and then we've come down and we've broken through the month open through the microcomposite VPOC, and now we're back down testing, okay, this key CLVN, this low volume node between the two distributions. And you can see that the lower distribution, we talked about this yesterday, this lower distribution has a lot of undetermined fair value. What do I mean by that? Well, the value, there's no clear, concise price acceptance in this area. It's pretty blunt with multiple high volume nodes. And if we don't hold above this 2688, and we're likely to come down here and chop down here. Now, significant is that the value area itself, if you go back to yesterday's video and the prior videos, the value area of this microcomposite that starts from the breakdown day on February the 2nd has shifted up. The value area high was at the 4550. It's now shifted up with the volume that we put in here and the fact that we've come back down again. This area, the value area, is shifted up from the current microcomposite VPOC, and the value area low is shifted as well. So the key line in the sand below now becomes this 2658. This 45 is still important because it is now the value area low of this microcomposite, which was the breakout, but this value area has just expanded. And that means we're likely to see a lot more chop as they come down here and fight between these two distributions. So what's the important levels today? Well, 95 for one. We just put in the overnight low at 93.25, but 95 is going to be the area that we need to come up and get above so that we can make a run back towards the low of yesterday. The low of yesterday was at 2701, and whether or not we can get back into the 2700s and get back inside of yesterday's for another run back up to test the month open at 2711.25 and possibly up into the balance up here of the upper distribution at the 2250. If we don't hold the 95, look for them to come down and test this 88.75. This 88.75 is going to be my over underline today, and a break below that, I'm sorry, 88, not 88.75, a break below that should see us come down into the first area, the first high volume node down here at the 26.72.25, and then we're likely to start chopping here. And then the key line in the sand below is going to be this 58.25, because that would likely take us for a bigger move down into the where the former microcomposite was in the March contract, and move down and start chopping in this undetermined fair value. So if we take a look at the overnight inventory rejected the range low from 2 days ago at the 17.25, and we are somewhat balanced. I'd say it's probably 60% net long and 40% net short with the break below the 2700. But we've got a clear, okay, it's almost a triple distribution. We've got a clear break. This run right here was a stop run. Now they're trying to accept value around that 95. We've got a weak low down here at 93. So we need to accept 95 and then get back up above the 2700 if we're going to try to make a move up into yesterday's lower distribution and a move up into the 2705, 75, and the month open. So moving our levels over, our overnight low is down at 93.25. Now that can change coming. We still have some time coming into the overnight session. Our VPOC is not likely going to change. So that the Globex VPOC is up here at 0950. And that's going to be a key target, with the move inside yesterday's range. Of course, we have a full session ATR running at 20 period full session ATR running at 2679 right now. That's the 20 period average true range for the full session. Off of the overnight high, the daily downside ATR target is down here at 90. Then we have our key line in the sand right here, which, I'm sorry, our over-under line, which is going to be at 88. And a move below that, we're going to be targeting the 84.50. And then 80, and then we've got that 72 area. And this is the former microcomposite VPOC for this area, adjusted from the March contract to the June contract. Critical mass. We're not likely to see monthly critical mass. Monthly critical mass is down here at 2657. We have 2 sessions left, so 2 times the daily ATR is 53.58. Off of the 27.11 and a quarter puts our monthly critical mass at 57.75. But our weekly critical mass, we are below it right now. Our week open was 27.57. That's the full session Globex open for the week, and 2 times the daily ATR brings the weekly critical mass to 27.04. And if we don't get back above that coming into tomorrow or later this afternoon, we could see the capitulation from the buyers and move down towards that 72, 74 area. Off of the overnight low, our daily upside ATR target is 27.20.50. So just to put that in context, with the daily ATR down at 26.90, we basically almost have come down through the full session. If we get below the 90, then you start kicking in, especially if we get below the 88, we start kicking in for a possible continuation trend down, okay, into the close. We are going to open up with a gap, so we have gap rules in play. So I have to approximate this right now, but let's say we're trading 26.97 coming into the open. I'll make the adjustment in the room once we open. Our close was at 27.0550. So our half gap fill is 27.01 and a quarter. And basically right 1 tick above our session low for yesterday. So, but this again will have to be adjusted once we know what the actual open and what the actual gap will be. All right, so these are my levels. Let's talk about my hypothesis. My main hypothesis is a open auction out of range, a run up into the 2700, and between 2700 and 27.0550, I'm expecting initiative sellers to step in, rotate us down, take out the overnight low, push through to take out the naked VPOC at 92 and a quarter, and then come down and test this 88 with a stab below it down to 84.50, and then finding buyers and rotating us back up and chopping between the 90 and the 2700 and going sideways as we fight the centennial number at the 2700. That is hypo 1. Now, because we've got 2 days left, there's a possible run to get back above the month open. So my hypo 2 is going to have somewhat equal weight, and I'm looking for a open auction out of range, a push to take out the overnight low, and then down here in the 92 to 90 area, looking for responsive buyers to rotate us up, come up, fight the centennial number and the range low, and then buyers take control and push us up into the overnight VPOC at the 950 and test the month open and likely try to push through it but fail, and then come back and close somewhere in around the 2705, 2706 as we still have one more day left in the month. That is hypo 2. Because we've got a gap down day, my third hypothesis, which is my trend hypothesis, is a open auction out of range, failure to get in and hold the 2700 and the range low from the prior day, rotate us down into the 88, chop between 88 and 92, and then get a liquidation break and push down through down to the 74 area, and the target for hypo 3 is down here in the 74 area, possibly even down to this naked VPOC down at 66.75 if we get critical mass on the week kicking in. So that is my hypo 3. Hypo 4 is a take back day, a open auction out of range, push down, take out the gap down here at 95.50 and somewhere in this 95.50 to 92 and a quarter, finding buyers, rotating us back up into the lower distribution, push up into the month open and the value area. The value area really isn't valid because we had such a wide range yesterday, which was basically kind of like a trend day once they failed at that 48 and got back inside of the 32. And I'm looking for a continuation up into this 2250, which is the current microcomposite VPOC, and testing the LVN from the double distribution from yesterday, and basically chopping and closing back inside of the longer time frame balance that we've got right here at the 2250. So that is hypo 4. So those are my main hypotheses for ES. The fifth hypothesis is just basically we fight the low and the 2700 and we have a 10-point range and go sideways between the 92 and the 2702. Those are my fifth alternative. Going to gold. Gold, we were looking for continuation down yesterday. Where's my gold chart? Oh, there it is. Yesterday, we were looking for the failure to hold and get back above the 59 and a push down into the 51. We didn't quite get there yesterday. The low yesterday was 52.20, but we did get there today. And this was the first spot that we'd be anticipating the next bounce. This is important, this level right here at 51.4, because we've already expanded the average rotation on the larger time frame. The average rotation is between 38 and 43, and we're 63 right now. So if we don't bounce off of this 51, it's liable to, like an elastic band, when it gets stretched too far, it's liable to snap and get the next push down, which will test the lower distribution around that 51 down to the 44.10. But right now, I'm anticipating that if we can hold this 51, get back above that 55, a rotation back up into 59 to 60 area is likely to be in the cards. But again, if we don't hold this 51, look for them to see a liquidation break and a quick move down into the 44 area, former microcomposite VPOC and the key composite LVN. But I think we're going to bounce off of this 50 area and at least get a $10 to $15 rotation back up. This 1295.90 is still the most traded price going all the way back to October the 24th, 2008, and we're likely to try to make another run back towards it after having a major move down of $63.40. So key levels to pay attention to, 51.40. If we get above the 55.70, look for that push up into the 60 59.60 area and probably chop there as we accept this price again and start moving our way up. If we don't hold the 51.40, then look for the overnight low, which is down at 49.60, and a break from there will give us our liquidation break and likely get down to the 44.45 area. All right, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.